what you will learn in this channel, you can also add it to your own strategy to make sense. Okay, welcome to the conclusion. This is the final conclusion of the engulfing strategy, how you can trade the engulfing strategy. Now, why I'm adding this video is to make the beginner trader have deep understanding and clarity. Okay, to have deep understanding and clarity concerning the engulfing strategy, in order not to be confused. Why is this? Why is that? Okay, I'm going deeper by showing you more examples. Okay, so the engulfing strategy, like I said, your entry, this is a good example of what I was trying to say in the previous video. If the engulfing is too long, that means you're going to have a high risk trade. If you want to enter just at the close of the engulfing, which is here, that means your stop loss is going to be here, and the risk, you can see, is too high. You are risking a lot. Okay, your stop loss is what is very high, to very much. Okay, you understand me? But if you can take that risk and you enter just at the close of the formation of the engulfing, this bearish engulfing, and the market actually went in your direction, and then you close your trade, you can see the profit you made entering at just the close of the bearish engulfing formation. Okay, and the second one, which I said as well, is that you can wait for the retracement for market to get into the zone of the candle of interest, which is that candle by the side of it. And if you mark your zone into the future like this, you can wait for the retracement, and this is the retracement when the market came from this direction down. After the close of the formation of the bearish engulfing, it retraced back into the zone of the candle of interest. You can see the piercing into the zone here like this, right? Into that zone there. So this is where your entry will be if you want to wait for the retracement. Okay, so your entry will be somewhere here, and that reduces your stop loss. Your stop loss will be somewhere here. You can see the difference, right? Good. So, and that's how you get your profit. So just that it retraced back again into the zone, didn't hit your stop loss, and that was when it fully dropped back down there. Look at this example again, this engulfing here. You can see after the formation, you enter at the close of that formation, and your stop loss will be somewhere here. Okay, stop loss will be here, and your entry will be somewhere here. So it depends. If you find a small engulfing or that is not long, yeah, you can take that. Your risk will still be small. Okay, you can take that opportunity, and your risk will still be small. All right, good. So after that, the next candle just started dropping into your direction, and this could be your probably TP1 and then TP2. You can see that. So your TPs were just hit. Okay, now look at this one here again. Look at this one here. This engulfing, after it was formed here, market began to rally straight up. So your entry simply will just be here. Okay, and stop loss somewhere here. So the market will just rallying up into your TP1 and TP2. Be your TP1 somewhere here, and then your TP2 somewhere here. Okay, so you can see how it really works. It's a straightforward strategy and a very simple strategy. All you have to do is to be able, number one, identify the engulfing. Once you are able to identify the engulfing formation, and then wait for the full formation, the completion of the formation. Once that is done, it's time for you to fire down, and then either you can enter using these two methods. Either you enter just at the close of the formation, or you wait for the retracement back into the zone of the candle of interest. Okay, that is just all. So let me just show you more examples. So you'll be able to, as I say, always back test. When you back test, you will see similar formation and know what happened as at that time, and take the same action. Okay, know what happened at that time, and then you take the same action that the market gave at that first time. Now look at this one again, and the sideways movement here. This broke out of that zone. You see the engulfing. At the close of that engulfing, you enter the trade with your stop loss somewhere here. You enter at the close of it, and then you drop right down. Okay, look at that. Look at this one as well here. You enter at the close of it, you went up again, you came back into the zone here, you can see here, and give another engulfing out of that tight spot there. It broke out. So it's very, very, very easy and very simple. This strategy is very, very easy. Again, I say very, very simple. Now look at this part. Okay, well, I'm going to talk about this particular candlesticks. Okay, doesn't look like an engulfing until this place. This one itself is a different one. So I will be sharing this particular one and how to trade it in the previous video to come. Yeah, this is the same thing I'm talking about here too. Look at it here. I will be talking about it here in the previous videos to come. Okay, so same thing here too, and this is an engulfing as well. So the engulfing traded above and then came back into the zone. From there again picked up. That will be the entry for those who are waiting for the reversal, and then it came back into the zone again, before it rallied up in that direction. Look at this engulfing here again. At the close of this engulfing, market went in your direction up to this very location here. So your TP was hit. Your TP was what was hit. And look at this one here again. At the close of this engulfing, you entered. So it retraced into the zone, the other block, okay, and before it began to move in your direction. So you will have more gains and minimal loss using this strategy. More gains, minimal loss. Not that you're not going to lose, because some of the engulfing you'll be eyeing will be violated. Probably if you're not able to locate the right, if you're not able to pick up the right location, probably you pick up an engulfing that is in the wrong location, it will be violated. Okay, so I teach my one-on-one students how they are able to locate the right location for your engulfing in order not to hit your stop loss. Because if you keep picking the right location, that means you keep getting losses. And this strategy is more of wins than loss. It's more of wins than losses. Again, I say it is more of wins than losses. Or what I've been showing, you can see your chart. What I've been showing you, go confirm on your own chart and see yourself. Look at this engulfing form in this particular trading day. Form there and began to rally up till that day closes. Okay, profit closed up the day in profit. Look at this day as well. So what I was telling you, this engulfing form to go down after the sideways. But look what happened. Thinking it was retracing into the zone, it broke the zone and became a breakout block from there. Took it as a support and then bulleted up. Look at the engulfing that was formed as well in that other direction. You see that now. So your ability to understand the right location also matters a lot. Also, you can also use daily direction to know the direction to expect an engulfing candlestick. If you are able to read or predict the direction of the market for the day using your daily time frame or weekly time frame, even monthly time frame. Let me just say daily time frame, because for those who are day traders, then you'll be able to know the the angle to expect an engulfing. You see now. So if you are predicting that the day will go bearish, then you should know the angle to expect a bearish engulfing candlestick to take you down the ride for a drop. You understand that? These are the deeper things I teach in my one-on-one class. But I'm revealing all these things to you for start. What I'm showing you here is enough for you to start and start becoming profitable in the market. You can see all the examples. You can see them there on the chart. You can see all the examples on the chart. Let me go to 4-hour time frame. Okay, yeah, you can see all the examples in the chart. So once you see the market dropping and dropping and dropping and dropping and dropping and dropping, just let it do what it wants to do. Let the market do what it wants to do. The moment you see an engulfing release like this in the opposite direction, standing up with full body, it's telling you something. The market is telling you something, meaning this rally down, this drop is what ended. A new move is about to begin. It's about to begin. Look at this drop here, this bearish one here, and then look at this drop here, these two. candlestick formation here, and then look at the drop. This turning point was predicted by this long candlestick. So guys, thank you very much. Thank you, and have a nice time.